All right, guys, so let's quickly talk about the CAD jobs data that we have coming out at 2:30 p.m. So, first thing I want to say for this data is I have no appetite trading the CAD to the downside. The reason is because of pricing and also positioning as well. So, I feel like what's really going to move the markets is if we see a hawkish outcome, and I'm going to dive in deeper the reason why I favor a hawkish outcome. So let's quickly start with the employment uh, numbers. So one thing you need to know is it's just like NFP. You don't only focus on the headline, which is the NFP. You focus on the unemployment rates and the average earnings as well. So that's the same thing we're going to be doing for the CAD. We focus on employment and we also focus on unemployment as well as average hourly earnings. So starting with employment, let's take a look at the forecast for this. So markets are expecting this data to print in at 25K, which was previously 46.7K. You can see, so this is actually a very huge drop in employment numbers for the CAD. So that's what the markets are expecting. And if we take a look at the estimate here, the minimum is sitting at 15K, while the maximum is 69K. So it's actually a big deviation within these two. So it's going to be pretty hard to get outside this range since the markets are, majority of the market participants are going for a 25K average. So now let's talk about a dovish outcome first, which is my least preferred option. So let's quickly talk about the dovish outcome. I'm going to also pull up the time series as well for this one. So if we're looking at this for our employment, I actually went with 20K. I feel like we don't really need to get to 15K. 15K is really outrageous. And also, if you take a look at the forecast distribution right here, you can see majority of the participants here are sitting at this 25K, and we only have one member here sitting at 15K. So that's an outlier. Same thing with 20K. 20K is an outlier and is also below the prior. So I feel like that should just be enough to seal the deal for should just be enough to seal the deal for a dovish outcome. And also, I want to pull up the time series as well so you guys will understand this. On sec. So this is the employment charts. This is the employment time series. So previously we printed as 46.7K. So I feel like we need to see something below the prior and also something that is going to make this chart obviously drop down a bit. So it's not going to be a huge drop. I really don't feel we need to even get to negative numbers, but 20K should just be enough to do the deal for a dovish outcome. And then for a hawkish outcome, I'm expecting this to print out at 80K. So mind you, market's maximum here is sitting at 65K. So I don't just want to print at 65 or 70. I want to print at 80K. 80K would give me a very good conviction to want to trade this, because just take a look at the forecast distribution again. A lot of them are expecting 25K. So, and a lot of them are expecting a reduction, obviously. So if we print out above the market's maximum and then we even go as far as 80K, it shows you that yes, the forecast or the forecast that majority of these banks are expecting is quite wrong. So it's going to be a very huge surprise. So on a hawkish side, I want to see 80K or above. So now let's talk about the unemployment rate. So for unemployment, for a dovish outcome, I'm going to be looking for 6.7. And I'm going to talk about the reason why I'm going for 6.7. So the minimum here is 6, right? 6.6. And the maximum here is 6.7. The maximum 6.7 and the minimum 6.4. So for a dovish outcome, I feel like 6.7 or higher should just be able to do the trick for a dovish outcome. And if we take a look at the forecast distribution here, a lot of participants here are expecting this to go up to 6.7 to 6.6, sorry, from 6.5 back to 6.6. So 6.7 should just be able to do the trick in terms of the unemployment rate. And also, let's take a look at the time series to get a much better understanding on why I actually picked 6.7. Because 6.7 is going to be a new cycle low. Obviously, anything below this 6.6 that we had back in August is going to be a new cycle low. So I feel like new cycle high, sorry. So if you print out above this 6.6, which is like 6.7 or above, that should just be able to, yeah, that should give me, or that should give you conviction to want to look for CAD weakness. So let's talk about the hawkish outcome. So for a hawkish outcome, I went to 6.4. 6.4 here is the market's minimum. If you take a look at this, if you take a look at the forecast distribution, a lot of participants here are going for 6.6. But I feel like 6.4 shows that, okay, there was actually no increase in unemployment for this particular month. Why a lot of members here, like you can see, close to 8 market participants or close to 8 members here are going for a 6.6. So a 6.4 is going to be a huge surprise on my note. So if we do get it, maybe a 6.3, then yeah, maybe that should do it. But that should definitely do it. I mean, but a 6.4, I feel like we don't really need to get there. Maybe a 6.4 should be able to do it alongside the employment numbers, of course. And then for the average or hourly earnings, so this one, we don't really have a forecast to work with. So we only have the prior. So the prior here is sitting at 4.5. So for a dovish outcome, I went for a 3.8. And I'm going to talk about the reason why. You know the shifts I usually say when we have the shift from a 400 to a 300 or from a 500 to a 600, those type of shifts matter to the market. So I feel like if we shift from that 400 that we've been having, if we shift to a 300, that should just be enough to seal the deal for a dovish outcome. So a 3.8 is below the prior and is also back to that 300. And if we take a look at the time series for more context, let me show you guys what a 3.8 would look like on the time series. So yeah, a 3.8 is going to put us, it's not going to put us, it's going to put us below the recent lows that we had back in June 2023. So that's going to be a huge depreciation on my part. So I really doubt to get there, but let's see. Therefore, hawkish outcome, I went for a 5.0, and it's pretty simple. Above the prior and a shift to a 5 handle. That should, I feel like, yeah, that should do it. We don't really need to get to 5.5. A 5.0 should just be enough. Shift from this 4 handle that we've been having since for the past couple months, and yeah, 5.0 should be able to seal the deal for a hawkish outcome. So yeah, what are your expected reactions? So your baseline expectation or baseline reaction should be CAD downside and CAD yields downside for a dovish outcome, and then for a hawkish outcome, we should be expecting CAD strength and CAD yield strength. So you notice I don't really have any option for a possible trade outcome for a dovish outcome. Yeah, I'm leaning towards a hawkish outcome, and I hope we do get that because I want to put the trigger on my GBP CAD short. So we know the bank, we know the BOE cut rates by 25 basis points on their previous rate decision yesterday, and there was really nothing there. It was an absolute dud. I mean, they came out, maintained their usual stance. I feel like they're going to be doing that for a while. They cut one, hold one, cut one, hold on. So most likely that's going to be my baseline expectation. So we didn't really see downside for the pound on the back of that 25 basis point cut. But something that was also interesting was we didn't really even see even a short-term upside on the pound. At least not something to capitalize off, in my opinion. So that is the reason why I feel like at the moment it's a bit flat. So I was actually going to pre-position myself earlier this morning and get into a GBP CAD short ahead of the event, but this might be very volatile, and I don't want to open myself for that type of risk because you guys know I already took a few losses on the gold sales that I took yesterday. So I don't want to be opening myself to that type of risk. So I'd actually prefer to be patient and have a catalyst to want to trade GBP CAD to the downside. I've actually had very good trades on this the last time I've actually looked to trade this. So yeah, GBP CAD shorts. And if we're looking at areas for take profits, I feel like the first standard deviation here, or the first implied vol level low, should be able to at least see should be able to carry us to let's if we stay where we are right now, before the data. We should be saying about 60 pips or so. Then maybe if we do get very strong numbers, then definitely I feel like the second standard deviation low should be able to do it around this 1.7877 area. So yeah, that's all I got for the CAD jobs data preview. And as always, if you have any questions, please just let me know.